making sure that was working. All right, we'll go to GBP. And you said out of the 4-hour fair value gap. So what is he talking about here? Well, you see on the daily, we have a candle 2 closure. We have swept the previous high, close back in. That's paired with a change in the state of delivery, right? So you can see we've formed a reversal up here. And if you notice, then we reach into this fair value gap here. So inside this fair value gap, we have a candle 2 closure, right? So here on the 4-hour chart, we can then look for entry short following that, right? Now there's 2 ways to go about this. You can either go ahead and just use the 15-minute. So if I click here, go to all, and then just go to the 15-minute, that will be using the 4-hour reversal here, and then getting on side in the following candle. Let's go over that, and then we'll talk about another way to go about it. So marking this out, second, my mouse has on it. Marking this out, what do we look for? We look for candle 2 closure, right? Then I go ahead and find the high that made that swing point. And then I'm going to find the series of up-close candles. Once we close below the series of up-close candles, then we have confirmed this as a reversal, and I can look to get on side in the following candle. So I just started this new higher time frame candle. Where can I expect price to react or push lower from? Well, since we don't have a large wick here, it's a pretty bearish candle, and go ahead and mark out 50% of that. So if I'm expecting 50% to react, I can mark that out. Would be from here to here, which is that line. And then I can also mark out 50% of this series of up-close candles from body to body, right? And so you can see that's what this line is here. So when we open up this candle, I'm expecting a wick to form in here. Now, can it trade a little bit higher? Sure. But if I'm looking for an intra-candle change in the state of delivery or anything in there, any entry in here is valid, or I can wait for the closure through here. I'm going to ignore this little candle, mark that out. And this would be that intra-candle change in the state of delivery entry. That makes sense? So that is how you could approach it with a TTFM, which is just the 4-hour candle closure to the 15-minute. Now, if we want to look into pairing that with a lower time frame, what can we do? Well, we know we want to be inside this 9 a.m. candle short, right? So then I can go down to an hourly or a 30-minute and see which is better after that 9 a.m. Right, so there's 9 a.m. So from 9 a.m., we have any closure on hourly? No. We do here. So I could look to short this on the 5-minute after 10. You can go take a look there. Click on all. Now here is a good point that I want to talk about here. We have this candle closure. We have everything we need to be looking short, aligning that with the 4-hour candle. Why do I talk about I need to reach a point of interest? Well, we don't reach a point of interest here. What happens? I'm not calling this an opposing candle formation because it has never reached into a point of interest. Once it reaches into a point of interest, that's when a short setup forms. Now, if you notice, this is at the end of the candle. So even if I wanted to short this, I would just wait for the following candle. And there we go, right? There's the candle for continuation. And I don't expect this high to get taken, right? So any entry in here with my stop above these bodies. So, and there we are, right? Now, if I wanted to do that with the 30-minute and 3-minute, it's pretty much the same thing. I would just be waiting for after 10 a.m. Right there, 10 a.m. Here we form a swing. So looking short in this area. Does that answer your question, Louis? You want to wait for the candles to reach a point of interest in order for it to be confirmed. So if you go through my course, I'll go back to the 5-minute here. If I'm looking for a opposing candle formation, which is just an order block, or that's what we talk about in the course, what am I looking for? I'm looking for price to reach up into a point of interest and then close through the series of down close candles. So price here has to reach into a fair value gap or take out a high, right? And if neither of those are present, then I can use the opposing candles that form the reversal. So if we go back to this example here, what do we have? Do we have any swing high in here? No, we just have this fair value gap here. So for me to consider these opposing candles right here, I'm going to highlight them, right? This series here, this would have had to reach up and take this out. It would look something like that. Then I would consider it. But since it never took that out, I don't consider it. Here it finally takes it out. Then we get the closure below, right? Then I expect 50% of this to hold, right? Which it does and pushes lower. That makes sense? You need to have a point of interest. So basically we aim for candle 3 or 4 reversal, or 3 or 4 as continuation, not trade candle 2. Yeah, so if you've gone through my course and you pull up the flowchart, I'm never trading candle 2. Okay, do you think it would be helpful to buy your indicator to get more clear on C2, C3, C4? I would say no, right? And that's a genuine answer because you would make me money doing that. But if you go ahead and, like, I can pull up this indicator and it would mark it out, right? We pull up it here and just go, right? You see that it marks out this setup, right? It loads, right? You can see it's marking it out. How does that help me? It doesn't, right? All it's gonna, like, if I'm trying to learn the model, that's not gonna help me. It's just doing it for me, right? So all I would do is say, hey, you don't need it, right? Just find the higher time frame candles, find the closure, and then if anything, get a free little version of this. But all you can do is clean up your chart. You have the vertical lines, then go through the flow chart. We have the higher time frame candle closure. So then I'm going to look for the swing point. Where's the change in the state of delivery? I find the high, closure through that candle, right? So then I can look for entries in this following candle. Where do I expect it to form? Well, 50% of this higher time frame candle here, right? That's that equilibrium section of my course. And then 0.5 of the body in this CISD, which this doesn't make sense, right? To have price reach all the way back up here. I'm just focused on the open of this candle, right? Up to here for price to react, right? And I can put my indicator back on and it'll basically do the exact same thing, right? That makes sense? But you don't need the indicator to learn. I think it's better off if you don't have it. And then once you have it completely down, then use it. Okay, let me get through the next questions. Hola. Hello, hello. I clicked on TTrades, increase user volume. Nice. I keep having a hard time after daily bias is clear. The process to hourly and then to 5 minute. So once you have a bias, right? In this case, we're just going to use a daily bearish bias, right? The only thing I'm going to look for is I'm generally trading New York, so I'm going to focus on that. But if I'm wanting to see price go lower, I want to see price open, make a shallow high, and then start to trade lower, right? So if you think about this, and we have our daily candle, if price is going to form a high early into the candle, Asia or London generally, right? And if I get a closure through, then I can anticipate this continuation into New York. If we don't get something like that, and it just hangs around until New York, then what do I expect? Manipulation of these highs to then go lower, right? So really all you have to think about is, okay, if it's bearish, right? I want to see open, high, low, close. If price opens, let's say London makes a high, well, then you can anticipate this wick to have formed and the daily to continue lower, right? If we haven't formed something that you would trust to be an upper wick, right? And it just does something like this, well, then you want to see that upper wick form. That makes sense? So it's more so the logic. Let's see if I can find something. We'll go to the daily, and then we'll go to, right? So for instance here, you could have a bearish bias on gold because of the previous daily closure, right? There's that closure through the series of up close candles. I'm ignoring this little one because it's not relevant, right? Now with that, I can be looking to short in this next candle, right? And if I pull up my indicator, it'll show this little highlighted box in here, right? Cool. I know that. Now, if I'm expecting price to go lower, right? I'm not just going to say, hey, it's gone lower here. I'm trusting that. Let's go replay this. It's all about the logic of the daily candle forming. So I look at this. Do we anticipate, do we trust that this high has formed for the whole day, right? I don't, right? Because I want to see a little wick, right? Something I can trust. So I don't trust that. And we just took out a low, right? A previous day's low. So then I wait. I see this trade higher. That's fine, right? Then I see something like this, and I say, okay, we have retch up into this fair value gap. You can say fair value gap, volume imbalance, whatever. I'm just going to say fair value gap, right? So then I want to see if we close below here, I'm expecting what? This high to remain, which would mean this wick to have formed. I let this go. Okay, we close below. Now I can be bearish. So now anytime going into after this, it's the logic of I think that this wick has formed. So if this wick has formed and we're going to continue lower, I can look to get on side with that. Where could that be? In an hourly or 30-minute point of interest, or when we form a swing. Let's see. Right there. Maybe I get stopped out in there. I don't know what it looks like. We can go drop down to the 5-minute. And take a look at this high. Technically, the indicator plots it as a setup. I wouldn't, just because, take a look at this. The indicator is saying that because there's this little candle here, that this is the series. I would consider that the series. So we look, never get the closure below. So there's no valid setup. Right? Cool. Go back to the hourly. Now we want to see, do we form an hourly swing? We do. Went a little bit ahead. This I would only trade if there was SMT off this high. I'm not sure if there was. We have a quicker stream. Like we can take a look. My Wi-Fi is not. We do have SMT there. Cool. So then we could trade this, right? Because now I have an hourly fractal model aligning with the direction I want my daily. So then I could be looking in this 8 a.m. candle and this 9 a.m. candle short, right? And I'll use this indicator template to show you what I mean. That this is when expansion occurs, is when you have all these time frames aligned. You can see here, now you can see what's more clear here. This run up here, like this, and this reversal, or this, where we purge the highs, come back lower, right? You can see, what do we notice? All of these time frames are bearish. Bearish, 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 bearish. That's when we get expansion. I don't know if anyone traded that gold setup today, but that's a solid one. But hopefully that answers your question. Let me go back to it. Dennis, just on how to go from the daily to your lower time frames. Think more in terms of logic instead of trying to trade it as a pattern, right? You want to think of, okay, has this wick formed on the daily? Can it expand away? You caught the gold setup? Nice. I think the question is who didn't take the gold setup today? Well, that is glad to hear that. Let's see. We go back up. I saw candle 2 form on the 4-hour, drop to the 15-minute, and it failed. Well, so here's the thing, right? If you're trying to, because what you're trying to do is go to the 4-hour here, because that's what you're doing. You see how my daily bias is bearish because of that daily candle? So if you're trying to long this setup here, that's just opposing my bias. That's all it is. I think that's the one you traded. Let's see. Oh, you traded that one. This one. I mean, you can say that is a valid setup, but let's look at this real quick. We look at this last candle. It's very bearish. That's fine. But are we reversing off of anything relevant here? Like, we're just leaving this low, right? For me, I can't trade away from equal lows like that, right? So that's what I would say there. And then mainly is I draw all my bias from the daily chart. When I see a candle like this, pretty bearish for me, right? and then you can have that fair value gap as a target. I would say with that, it's just, yes, it's going to fail if you pattern trade it, you know? It still will fail, right? No model is 100%. Everyone knows that. But if we go in here and take a look, I didn't look at your drawing yet, or your analysis. Let's go into the 15. Is there a confirmation? I'll teach you one thing here. Yes, we eventually get it. What do we not like about this? Here's where we get it. Who can tell me what I don't like about this reversal? Let me see in chat. Get back to chat. It's choppy. Yeah, exactly. So we take a look here. If we want to see a reversal, we want to see up, down, close over, and it can go higher, right? What do we notice? Is this looking like expansion into expansion to expand higher, or expansion into retracement? To me, that's a retracement more because it's slow. And then when it goes back up, I'm just viewing this as a consolidation range. Right? So then if we get expansion back lower, now we're expanding back into this range. I view this as a reversal, right? Or it can go take out the highs. Either way, mechanically, it's a valid setup to look for longs in here, expecting this to hold, right? But why does it fail? It actually held for a decent bit, but it fails just because the bias is wrong, right? That's all. Yeah, okay. You guys got that. Let me scroll back up. Try not to miss any questions. In a nutshell, I'm trading a potential 4-hour expansion candle. Small wick has been created. I need a 1-hour or 30-minute fractal model inside that with a valid CISD and ISCSD. Yeah, that's essentially the model. Align with a higher time frame expansion candle, trade a fractal model inside that. Then you can add SMT, all that. Correct. Don't get so lost into trying to do so much. Try to make it simple, right? I expect price to go lower. Do I have a small wick on the higher time frame? Do I think that wick has formed? Yeah. Do I have a fractal model? Yeah, cool. Take the trade, right? If it fails, journal it, right? If you try to do too much, it's really just going to confuse you, right? As you grow, you'll be able to see more, and then you can expand on that. Today for the 4-hour, what else could I have used as the confirmation to the downside? I was anticipating a selling wick. Okay, let's take a look at indices today in Q. So looks like it's going to be going for Asia lows down here from the looks of it, right? And we want to talk about how you could trade that. Well, what I would do is use the hourly or 30-minute because that's my model. If I take a look in here, what do we notice? 9 a.m. This 10 a.m. candle forms a candle 2 closure. Cool. So if I go to the 5-minute, do I have a setup? And I notice, what do we have? It caught the upside move first. And then if we remove all these drawings, we form the high. But what do we not have? Let's go over this real quick because it looks better than it actually is. Right? We have yet to form the change in the state delivery. That's not that ideal, right? Ideally, this closes below here. At the start of the new candle, retraces, forms the upper wick, right? So right there, then you could look to get on side if you wanted, right? Or you can wait for the next continuation. This, to me, is the more ideal of the setups. I can explain this. A bit difficult because we don't reach into a point of interest there. But if, let's go over this real quick. We expand into a low here, right? Now tell me, is this expansion back up, retracement, or consolidation? Right, that's a retracement, it's very weak. So then, when this candle opens, very bearish close, that would be another valid look short. In my eyes, it doesn't reach a point of interest. That's where it becomes a little bit more discretionary. Right here, what do? Reach up into a fair value gap. We go and close below, right? And we're getting that continuation lower. Now, this is somewhere where I wouldn't be short unless I'm short earlier, personally. That's something I prefer because as I talked about in my previous stream, if I'm wanting to get short, I want to generally be short before these lows get taken out, right? So somewhere in here, right? Or even that's a bit late. So if you wanted to get on side, you could do the hourly. Let's see if there's a 30-minute. 30 minutes better in my eyes, like quite a bit better. Let's walk through it and see if there's anything. Where are we at? Oh, it's that right there. So you take a look at the 30-minute candle, right? We have a very nice bearish closure there. And then what does this do? Price reaches up into the small fair value gap and then goes. Now let me talk about something here. Mechanically, what? There is no model yet because we need to close below there. So for those of you new to my model, there's no entry in here. For those of you that have traded my model for a few months, you see how there is a possibility to take an entry there, understanding the open high low close of this way. Right? Then you can see then it forms, and then you have the continuation. Right? Now in this continuation, ideally I don't want to see price retrace all the way back up into that high. Right? So then that would be a possible entry. Right? We're going lower now. That makes sense for indices. RTY, you got the RTY, nice. I used 3 minute with 15. No, that's solid. I actually talked about that a little bit ago. I don't really like the 1 minute. So if you like the 15-minute swing points and then using a 3 minute with that, I think that's pretty awesome, to be fair. You guys got to realize you can adjust this however you want to make it easier for you or what makes sense to you. So, all right, let me go ahead, scroll back up. Hopefully that helped, Viper. I saw this setup on GBP USD sitting on my hands. Yeah, good idea sitting on your hands there for that setup. Would you take an entry within C3 even though we didn't get an ICCSD within candle 2? So what do you mean exactly an intra-candle change in state? Oh, I think you're talking about, I don't know if you mean intra-candle change in state delivery in 2. Let's talk about it real quick with the model. This is just the change in the state delivery when we close below there. The intra-candle change in the state delivery refers to the formation of this wick on the expansion candle. Right? That makes sense. So it's the change in the state delivery inside that candle. But mechanically, right? My model is mechanical. You have to wait for this closure through. Right? That's why I can code it. Okay. Got that question. Still at work. Yes, this will be uploaded in the WAP. You wait till the candles to reach the point of interest. Answered that question. Answered that one. AT, struggling with bias on some days. How would you go about gauging the daily bias for yesterday on NQ? So, example, let's go back to NQ. You got to realize you can't expect to have a bias all the time. Right? There's going to be days that make absolutely zero sense. Right? So, a lot of these days in here, I don't expect anyone to really understand those, right? Especially if you're newer, right? The only way with my model that you could really anticipate a bias is this candle 3 closure here, right? Because this is kind of a range, right? And if you notice, what do we have? We're just using candle closures. Candle here closes over the body. That is a candle 3 closure. So then I could anticipate candle 4 higher, right? Which it moves higher, right? How would I anticipate this day? Really, unless you're trading this as a range and seeing the purge of the low, and then you'd have to go into the hourly and wait for a change in the state delivery, right? So here, until here, I would say bearish, right? This is where it's like, oh, it can be bullish, right? And then we have failure swing. So I wouldn't get too caught up in not understanding some bias, right? You just have to wait for the days that are very obvious, right? Like if I show you NQ daily chart here, it's not super obvious, right? If I show you gold on the daily for today, Is that pretty obvious? I would say that's a bit more obvious. Can you agree? Right? We sweep, close. We have a fair value gap right there. See what I mean? So it's like, if it's not obvious, don't worry about it. There's going to be times where nothing makes sense. Right? And yeah, especially like a big gap up, right? Like, are you going to predict that? I don't. Like I hear it's like, hey, we're bullish if we hang above this, right? We go to the hourly, it's like, hey, we gapped up there. Do I anticipate that to hold? I don't know. That's when you have to use more intraday stuff. So why don't you guys start streaming at 9 a.m. between 10 a.m. For example, Asia, it's too late to watch. Oh, you're in Asia. So what we do with our streams is we try to align it with New York and European time zone. So like right now I'm in Africa and it's 6:30 p.m. Right? Back home it's noon. So it's like it's the best time we have found that allows most of our users to see the streams. Sometimes they're different timing, but that's what we have found to do best. Can you take a look at my gold short today? You already replied in the journal, but it was really helpful. Yeah, let me actually screenshot it. I'll throw it up in stream here so everyone can learn. Right? So this is exactly what we talked about a little bit ago, right? And you guys answered it correctly. What do we notice about this change in the state of delivery here, right? Is that immediate? No, it's more of a consolidation, right? You see now we're just consolidating. So we purge the low, right? And another thing to notice is, yes, we get the close below here, but you see how it's sweeping out these lows? If this was a more bearish close, then sure, it could continue lower. But even then, what would I do? I would say, oh, if I have a bearish close, I'm just going to let another swing form in here, right? Like get a little bit extra more confirmation, right? This is pretty valid, right? Aggressive up, aggressive down, aggressive up, aggressive down. That's a cool trade. So the main thing here is you want that reversal to be V-shaped. Let's see. Done your course many times, but there are some basic things I didn't discuss to revert them for YouTube. Yeah, so the only basic things you should really have to learn outside my course would be, you take a look, you just have to know what a fair value gap is, a swing point, or just liquidity, right? And then CISD, right? Those are the main ones. Or you can watch my standard deviation video. As you guys know, it's more of a confluence for me. If you understand those, I think you can get a grasp on the pattern of my model, and then it comes down to understanding the higher time frames, right? The daily bias, all of that. I use the indicator, it helps a lot. While I can anticipate everything that the indicator is going to do, plot, you don't have, not having to do the work every time. Yeah, so exactly. Once you reach a point where, hey, you understand my model completely, the in and out of it, that's when the indicator actually can help, because it's like, hey, I'm lazy and I just want it to draw it for me. Cool. That's sick, you know? Because it's like, I know what it's going to draw. It just saves me time. But if you don't know my model, I think it's going to hold you back from learning, because you're going to try to use it as a crutch. If price should form the manipulation wick first, would GBP USD be invalid? Let's take a look at the USD daily on the hour. And so this is one of those where it's like a delayed protraction profile, which essentially is, I look at this and I see all these highs here. If we open here, I would have said, hey, we just reach up into this, right? Like that would have been perfect. But since it drops down first, I'm not trying to short that, right? Especially after we took out a lot of these lows. If I'm still very bullish or bearish, then I want to see it return to form a wick, right? And that's like delayed, right? So then see how that forms a wick, new daily wick. Then we have the change in state delivery, right? And then there it goes, right? So this is a bit more complex than just an open high low close, right? Which is more ideal because this dropped lower first, right? and it delayed, put in its wick, confirmed that wick, and traded lower. So it's not invalid, it's just a bit more difficult to understand. How about we find that candle 2 closure is happening, but wick is not there? We still take the candle 2 closure or leave it? What do you mean a candle 2 closure without a wick? Because for a candle 2 closure, it has to reach above its previous. And so here has to reach above its previous candle, or here has to reach below it. It has to form a wick technically. Very rare. Maybe if a gap of some sort did not form a wick, but. How do you validate the high or low of the day / week? So it's kind of just using that change in the state delivery, right? So really, if you look at the entry sequence section of my course or any of that, I'm just looking for the logic. If I'm bearish, I want to see price form a high that I can trust. Do I trust this high when it forms? No. Do I trust this? Let's see. Ready? Right here, I can anticipate that it goes lower because of the candle closure and sweeping it out. Here, once we close below, that's something that I can actually trust if I'm bearish, right? Because it makes sense. Sweeps out, high to the left, makes a new daily wick, closure below, right? So it's just the logic of when to anticipate that. And that's just using swing formations and opposing candles. Now for the week, right? Generally for the week, what I do is I pair that with a daily closure. You can see here we have a daily closure that is bearish. Is that paired with an hourly change in the state of delivery? It does, right? So at this closure here, I anticipate this to hold, right? And that's kind of how weekly profile works for me, right? Monday expands away, Tuesday forms a reversal. You expect Wednesday to trade back towards the weekly open, Monday low, right? So really, I wouldn't really be interested in trading this really because those initial targets here were already taken out, right? But does that make sense? You're using daily closures with change in the state delivery. Let's see. You caught that. It's great to see people catching those trades. Would it be valid to trade the 1 hour Asia CISD on XAU? That's silver, right? One-hour Asia CISD. This looks a bit choppy. Oh yeah, that's valid. So let's talk about this. We're just going to clean up the charts because this is nothing but called range trading, right? We just take a look. This is clearly a consolidation, not leaving any range, right? So as we let this play out, what do we notice? We take out these lows, we take out all these lows. What do we notice? We have equal highs, right? So if you wanted to trade this, you could trade the hourly. You could trade this hourly to the 5-minute model, right? And then at that point, it's just trading it higher, right? And you expect it to go run higher. But yeah, that's a very valid trade there. SL over the CISD high RTP. Oh, you meant gold. Let me same thing, cool example. Oh yeah, so if you mean are you talking about this one here? This candle 3 closure? Reread. 1 hour Asia CISD. Oh, I see what you mean. Let me read. You're just meaning once we close below here on the hourly chart, taking an entry either on the retest or above that, and then having your stop up there or there. Now, the one thing I'm not a fan of here is generally how I trade is like we see this whole range up, right? If I'm looking to short in here, my final target or like a target for me is this. I want to be able to take partials or profit there, right? So if I was to do that, I can't really do that because to get 2R, I have to extend down here. Not saying that doesn't work, but it's more so, hey, do we expand here or do we retrace? Right, so this is when I generally want to refine it down. So it's not that I can't do this, it's just, hey, could I manipulate my stop loss a little to have it make sense? And here, I don't really know if I could do that, right? It would be like a 1R trade. Because for me, I don't trust this high to remain, but I do like we shouldn't have this fair value gap reach over, right? So above there. That's just not something that I would take. If this objective was down here, that's something I'd take, sure. Because now you're getting 2R out of it, right? But it's there. And yeah, I'll get to everyone's journals in a little bit. Did I already show the gold short of today? Yeah, so we'll do a quick review. But basically the main thing for gold is just if we have this change in the state of delivery, you expect the daily wick to have formed, what I was talking about. Right? It's all just about the wick being formed. Then you can trade away from it. So I expect this wick to be formed here. Then we get into here, you're expecting a continuation out of this fair value gap. So there's some people that will just enter in here, put their stop above something, right? And see, this could make a little more sense reaching for 2R, but this is where I'm looking for a swing, right? We have a swing here, we have a candle closure, but I went over that on why this isn't valid for me. And then we have another candle closure here. Why is this valid? We have SMT with silver. Right? So then that means you can look short into here and here, looking for that objective. Sometimes they're best, aren't they? Guys, got those answers. How do we know when to use the 4 hour or the 1 hour? So I almost always, I'm using the hourly or the 30-minute to frame my entries. What I use the 4 hour for is similar to the daily, right? So for instance, if I'm bearish on the daily, right, I'm trying to align myself with a bearish candle. So if I'm trying to do that on the daily, I can also do that on the 4 hour time frame, right? So on the 4 hour time frame, what I want to see is, okay, I'm going to let its wick form. You know how we were letting the daily wick form? Then the goal is let the 4 hour wick form. If you do all that, then you're basically trading away from wicks, which means if we're going to have an expansion candle, that's when expansion occurs. So I use the 4 hour more as an alignment for the higher time frames. I'm not using that really for entries like that. Hopefully that helps, Ezzy. Like what I mean is, let me find a better example. This. Let me find one with a little bit better of a wick for the demonstration here. Nope, I don't like that. Okay, we'll do something like this. Right, so we have a candle 2 closure. It's also ideal, closing over there, cool. So if I'm going down to something like a 5-minute here, right, and I'm trying to trade this long, right, because there is an hourly swing point, right, what do I know? I know that I want to see price, or we can wait for a new swing point. So maybe I'll do the 30 and 3. Sorry, I'm just doing random examples, so. But I'm trying to trade this 4 hour candle, right? So if I want to trade the 4 hour candle, I want to let its wick form, right? So to do that, I'm going to try to let the wick form. I can just watch it. You can see how it reaches back into where you want it to hold and then starts to react, right? So now this is when I'm going to pair it with a lower time frame. So ideally, if the 30-minute forms something, may or may not. Doesn't form anything. Maybe there's nothing that forms there. Let's see. Okay, there it forms a swing finally. So then now I have what? A fractal model aligned with a daily open, low, high close, and that wick on the 4 hour I've already had form. Right, so then I expect that to trade higher. Right? Bit choppy, like it doesn't, right? But you guys get what I'm saying? Trying to just find a random example that works, but a bit quick. Probably should just stick on the hourly. Wait for hourly swing. See if we can repeat this real quick. Hourly forms a swing. Right here. You can take a look at the 4 hour. You're expecting it to trade higher. Then go here. Then when this next candle opens up, if we open up in a fractal model, and I don't know why I didn't print anything. Am I not on the Yeah, there it goes. So a better example here is we have an hourly swing point forming, right? We've already formed this wick of this candle. I'm expecting a wick to form here. I'm not expecting this 4-hour wick to go all the way down here, which is why this is my invalidation. When you're changing the higher time frame candles, they're changing it quarterly. How do you do that? So I have a few different templates set up. So for instance, this is a daily 4-hour and then the 5-minute. So this will be hourly, right? All I do is I have my indicator set up to where it's on an automatic time frame pairing. So right here, if I have it set to automatic, it's going to use the time frame alignment that we use, right? So if I'm on the 5-minute, it's going to show the hourly. But what I do is I add multiple of them. So if I want the 5-minute to show like that, but also the 4-hour and the daily, it can do that. Oh, okay, let me scroll up. Okay, I'm trying not to miss any. If I miss any, I'll let you know. I'm having a losing streak and my psychology is pretty bad right now. Starting to make several mistakes according to the rules. Any recommendations? I would say go ahead and flip a coin 20 times. When you have heads, add 2. When you have tails, subtract 1. And see how many times you lose in a row or hit tails in a row, but then how many times after 20 flips you are below 0. Right? It's a longer game. You got to think not in terms of 1, 2, 3 trades, but you have to think in 20, 30, 40, 50 trades. And so I would say don't focus on the outcome, just follow the rules, right? Try to just learn from everything. A loss isn't a loss, it's just a lesson. How can I tell which asset is stronger or weaker? So with that, you can use SMT, right? So for instance, here we're on gold. Let's say silver didn't take out this low. Looks something like this. Well, then silver is probably stronger, right? So you can use structure, SMT. What do I mean by structure is, let's say, generally like to do this on like the hourly, but let's say here, we're just having big displacement candles, right? Versus on silver, it's just hanging around. Like gold is stronger, right? So it's mainly SMT and structure for me. I don't know if Garrett probably has a stream on that. I don't know if anyone can link, or I'll just text Garrett and Garrett. Should the CISD always be created before the next candle? Is this ideal? So I generally find it ideal that if the CISD is formed within candle 2. And so if we go into here, probably didn't choose the best example, but right. We take a look. We have the CISD forming before the candle closure. That's ideal because then I know where I want it to hold, right? Going in here, I know I want to see price hold the upper half from the open here, right? And I want to see it hold the upper half of the change in the state of delivery, which would be there, right? So going into this candle, I know I want to see it open a shallow wick, trade it higher, right? That is ideal for me. Does it mean that it always occurs this way? No, sometimes it will wait and you'll have like a late reversal and then it will form that in candle 3. And so that's why the flow chart has those options. But I do prefer it to form in candle 2 because that's forming that wick. Can I show you what an expansion candle looks like? Yeah, sure. So an expansion candle, let's let this play out. Expansion candle, you notice, has a small wick and a big body, right? What that means is it forms a small wick and it allows expansion to occur, right? Having a lot of movement. So you see, small wick, big body. Forms the small wick, trades away, expands, right? So we take a look. There, right? So how does knowing this help? If I'm trying to trade this, right, up, I don't want to see price go all the way down here because what's that doing? It's making a large wick, right? So if it looks something like that, we're trading all the way down here. Well, price doesn't have enough time to, or range to just go all the way down here and then expand higher, right? That's a pretty big move. But it does have enough time and range to make a small wick and then make that move, right? You see the difference in like line length? If we straighten that out, it's almost double, right? That would be there to there versus that. See what I mean? How do you trade the setups where the first target is taken or when 2R is higher or lower than the first target? I generally avoid them a lot of the times, right? Unless I'm very strong on a bias where I'm expecting it to go higher, then I can. When adjusting your stop, would you adjust it after the first CISD or after entry or after 2R? So if I take a partial, then I'm going to adjust my stop, right? But really the only time I adjust my stop is when I have a new low to trail to, right? So let's just say for the sake of things, I was in right here, right? With my stop there. You guys know I don't enter candle 2. This is just for the sake of the example, right? We're just trading this higher. Cool. Am I going to trail my stop, right? Because a lot of people will be like, oh, it trades away, trails their stop, gets taken out, and then it wins, right? No, I need to have a new opposing candle form. I need a point of interest, close over. Does this have a point of interest? No. Does it close over? No. So I don't trail it, right? Let this form. And there is where I could trail one, right? Or I'd take off because it reaches into here, swing point, close over, mainly because it takes out this high, right? So then I could trail my stop there, get taken out, right? Maybe it goes higher, maybe it doesn't, right? But that's where I would be out because let me do it a little bit more clean, right? I have a fair value gap here. That's my point of interest. Once it closes over a down close candle in there, right there, then I can trail. Then it takes me out basically right away, right? Or I can take my profit at this high. I only trail if I have a new invalidation or if I take off at 2R, right? So another thing is, let's say I take off at 2R. I'm not going to just leave my stop down here, right? And let price go stop me out. That doesn't make sense, right? I'm going to at least put it break even or trail it higher. A read on EURUSD. We can go take a look at EURUSD real quick. USD. This is new, I guess. Here we are on Euro. Let's go take a look at the daily. It looks rather not amazing. I'm not replaying. Oh, it looks decent. Yeah, so here, there's nothing mechanical for my model, right? But if you notice, what do we have? Do we have any swing points here? Okay, we're taking a look. Swing points anywhere? No, no swing points to be found, right? So those are all failure swings. And what do we notice? We take out a high, and then we form a reversal here, right? Now this isn't a candle 3 closure or a candle 2 closure, but if you're using the equilibrium, you can see obviously not respecting that, right? So then I can look to the hourly and say, hey, you know, is it respecting or respecting up close candles here? I'm down here on the hourly, pull up the daily so you guys can see the separations. I see us form this reversal. Do we respect 0.5? We do dig a little bit deeper. Still respect this area. And we trade lower here. Right? And continue to trade lower all the way through these failure swings. Right? So now after these failure swings, we still have a little bit more here. But I ask myself, okay, is this a retracement or a reversal? Now, in this case, I anticipate Euro to continue lower. Right? So I would like to see that continue lower, just because I don't like to see these lows left like that on the daily. Right? I'd rather just run out all the failure swings, especially a candle lacking a wick. Right? You have to realize this is a pretty decent daily range. So how would I approach this? Well, I would be more so interested in cleaning this up. We close below this. If we close below that, we're expecting that to respect as well as the lower half of this. So then that gives me a framework to say, hey, I have this area where I'm anticipating price to respect, right? Which is here. So for instance, let's say we do go and close below here, then I anticipate the next day to make a shallow wick and continue lower as well. This isn't looking half bad, but did GBP already take the low? Yeah, GBP is a bit weaker, but I'd expect this to fall because move my drawings as well. Right there. there's that hourly change in the state of delivery. Also reaches up into a fair value gap, forming a candle 2 closure. Go to the 5. Right? We have this closure through here, forms a swing in the T spot, continuing lower. And so I'm expecting this wick to have formed and start to expand lower. The only thing I'm not a fan of is, look, it spent 45 minutes forming that wick. So unless it's going to do it all in the next 2 minutes, it's likely to just close weak in here. The next candle opens up, forms a wick, expands lower, right? Answer your question in general. Yeah, can you re-tag me? Sorry, I woke up to 40 something tags, so I gotta get through them. Is my brother schooling all of us yet? He's working, learning, not schooling yet. Took an SL at 10 a.m. long. How did you take a stop loss there? Oh, you didn't take an SL. You took silver 10 a.m. long. Was this valid? Yeah, that is valid. Let's talk about it. 33 minute. Yeah, sick. We'll talk about this. Silver. We got 5 minutes left-ish. So this is a very good one. Why? We talked about it. A range. This was open, right? When you were looking to take that trade, it's like that. So that's your first target. So we know we want to be in the early parts of this next candle, expecting to trade higher. Right? So you can use the hourly or you can use the 30, right? So if we use the 33, we want to see that trade higher. What do we notice? We'll mark it out. Here we have the change in the state of delivery. Here we have another one. So I'm not expecting this low to get taken out or this to trade higher. That makes sense. You did a good job with that. We open, we drop lower. Yes, it does take it out, but waiting for our intra candle change in the state of delivery. We have what? Stretch down. We took out a low. Honestly, didn't expect it to get taken out and closed over. So here I could look to buy. My stop on this now, current low. And then my TP would be there. Or just about 2.3R or so, whatever that is. See what happens. Yeah, that's a valid trade. And you can see, right? I was wrong, right? I expected price to do what? Open, form a high, low right there, and go. It wicked out, right? But I'm not trading this until open, low, letting this wick form. Let this wick form, then trade it. Right, so I'm not guessing on stuff. Very valid. Do I just take trades after New York Open? I'll take trades from 8 to 11-ish. Sometimes, on the rare case, it'll be like 6 a.m., but very rare. When changing timeframes, higher timeframe. Oh, I went over that. Could you share the checklist for the Fractal if you got it in PDF? So if you go to my section in the course for my flowchart, that is the checklist. My indicator is completely separate and it is a monthly fee. There are free versions, it just doesn't mark everything out, right? But that's like I say, is you don't need to pay money for it. You can get free ones if you want, right? This just makes it more efficient for me and because it marks out what I want, right? So, circle on, what are the circles on your trading view besides replay indicators? So those are the templates right here. I think that's what you mean. So that just allows me to adjust these indicators. I may have mentioned this already, but on NQC3, what is your expansion year traded? Yeah, we already went over that in stream. So we have a couple minutes left. I'll try to get all the questions. If I don't reach your question, please tag me in chat and then I will get to it. PDF of the flowchart is in, let me actually just grab it for you. Just grab it and drop it in here. Let me have to load up the software. All right, it's taking a minute. Okay. All right, I just dropped that in the chat. Yeah. I got about 1 minute left. Would you say the reversal on silver was good? It's a bit choppy, but the framework is there, right? So it's something where your bias and the framework for the setup is very good. You can get a little bit choppy in here, right? If you're going to take an entry in here, you need your stop on the low, but besides that. So, all right. Well, with that, I'm going to go ahead and end the stream. I will get this uploaded here soon. If I did miss your questions, please just tag me in the Fractal chat and I will go ahead and get those answered later today. So, hope you guys have a great rest of your day, and I will see you guys next time.